Welcome to our Leaders in Housing Counseling call for the middle of October. Glad everybody's on. Looks like we have a really great turnout. Thanks, everybody. We're going to dive right in because it's a very crowded agenda, and we're going to do some updates on the HUD housing counseling contracts, which are finally moving. Hooray. And we're going to talk about big changes at NHRC. And sorry for all the teasers, but we did want to tell you firsthand. So I'm glad you're joining the call on that. And we'll get to that in just a moment. And then we're going to have Ross Gavinich, who is the president of the Cooperative Processing Resources. They've got a CMS, a client management system that's been in place for quite a while and has a number of features that are broader than many systems have. And so in our whole series of doing the CMSs, this is one that might be available to people if they're interested, and he'll give a good presentation on that. And then we're pleased to have Jesse Van Tol, the CEO of the NCRC, to talk about all the major issues around Community Reinvestment Act issues and maybe some broader things as well. He'll join us midway in the call, and we'll have a discussion there. And then we'll do a quick plug on joining NHRC. We've had a great year, I think, as we've said on the calls in the past. So glad that there's as much support as there is in the community. And if you haven't joined us yet, please make it happen soon. All right, with that note, let's dive in. So on the HUD housing counseling contracts, just to repeat, HUD understands the strain that groups are under with the delay in the funding process, and they're scrambling to move things quickly. I think they're still planning on getting the contracts out this week, so hopefully if you haven't gotten it, you'll get them early next week. And you should know, but if you don't, there is a HUD webinar this next Tuesday. I believe it's at 1 o'clock Eastern, and and the details on how to register are on the Jerry Mayer listserv that he puts out. So be sure to, and that just went out yesterday. So if you missed it, just go back through your emails and or do HUD.gov and get to it. But that was with the link to the registration. Contracts are going to be similar to last year. The one difference that I've heard about is that the contracts, the HUD will favor funding, and we'll have to listen carefully to how they describe this. The contract will have terms in there, but I think what the implication is that they're interested in in paying for direct service and having administrative costs not show up as part of the direct expense budget that you put in. So things like rent and computer expenses, those instead of doing it as a share of the contract, you should put it in your indirect cost instead. And the one interesting thing that I've been told is that a lot of groups are still not using indirect cost. So this is a percentage that your accountant or your auditor would figure out based on your budget of what your administrative costs are in relation to your overall budget. And the indirect cost is a way the federal government uses to build in administrative costs. So I think in an email I said that you wouldn't be allowed, it was described to me this morning as HUD frowns on including things like rent and computer expenses in the direct expense part of the budget. So look at that more closely. I haven't seen the contracts, and I've just been told this, so I'm just trying to give people a bit of a red flag so that they know. One other thing that is really useful in this process is to have a debrief from HUD on how your application, your NOFA application was received. And if you haven't done this before, they're actually quite good. They're very helpful. They're very detailed. Definitely ask questions about why if you're not quite understanding why you got rated at a certain rate on a particular line, it's really worth diving in, because there is a lot of thought that goes into these. They are interested in giving people full transparency as well, as much as they can provide transparency. They're interested in doing it. So go through your POC to get a debrief. And my experience in the past is you should try to do this earlier rather than later, because they put the files away at some point. It's not as fresh in people's minds, so better to do it early. So that was a quick run through. I think you'll learn a lot more next week at their webinar. But the good news is that they're really prioritizing this and really trying to make it happen quickly and completely understand how difficult it is on the funding situation for groups. So let's move on, and we're going to, our next moment here is to talk about big changes at the National Housing Resource Center. So the first thing you should know is Matthew's getting married, and that's his family picture. And second, he's moving to New York State, and he's leaving NHRC. And almost 6 years of incredible service. We deeply appreciate this. I know a lot of you have worked with him on putting together field meetings and on going to lobbying events and trying to sort out how to get onto the webinar and all the kinds of issues that he's worked on. Obviously, the campaign work he's done around getting increased or protecting housing counseling funding and getting increased housing counseling funding, and working on developing the Brian Montgomery nomination, also a critical issue, working on a bunch of the legislative initiatives we've had, driving the sign-on letters, dealing with the complexity of how we make sure that we've represented underrepresented areas in when we speak about housing counseling. All those pieces Matthew's been a star on, and we really appreciate his work here. And we are also hiring 2 new people. And so partly for picking up our position for working in Congress, our policy and program director, we're happy to say we've hired Melody Emo. She's worked at NCRC, at Opportunities Now, and at Prosperity Now, excuse me. She's worked in the South Carolina legislature, and she's had I think she brings a lot of skills and talent to the work, and also some enthusiasm and commitment to the kind of housing justice work that we've been concerned about. Melody, do you want to just say a few words?
Thank you, Bruce. I just want to say I look forward to working with everyone in this capacity. I'm really excited for the upcoming year. I think there's a lot of opportunities for both NHRC and the field at large, and I'm ready to get to work. Thank you.
Wonderful. And we have also hired Ellie Pepper, who many of you know for work at Empire Justice Center, but also in putting together the events we've done around the country with the homebuyer initiatives, with some of the investigations around the loan modification work that we've done. Ellie's been, and some of the social media work, and there'll be more coming up. Ellie's going to do a joint webinar with a Facebook expert on our next call that will hopefully inform us all a bit about how to use Facebook more effectively. So I'm pleased to say she's joining the staff as our Relationship and Innovations Director, and that position will be to really work more in the field. And we're going to try to figure out, many of you have participated in these innovations in housing counseling webinars. This is an opportunity for us to try to figure out how to make it happen with several housing counseling agencies in a locality, develop some models, develop some relationships that might then be able to be shipped around to other locations as well. We're just very interested in trying to figure out new income streams that are still within the mission of our work and still strengthen the housing counseling field, but also deliver valuable services to underserved populations. So Ellie's kind of very well positioned to this. She will continue doing the work as well on putting together these events around the country. And we have Deutsche Bank committed to doing 3 more this coming year in 2019. And we think that we'll have another round in 2020. So very glad to have Ellie. Ellie, are you there?
I'm here. Can you hear me?
Oh, yes, we can.
Okay. I'm really excited about this opportunity and to be doing this work. Those of you who have met me and know me know how passionate I am about housing counseling and the benefits of the work that we do. So I'm really excited to work with all of you to get to see those of you who I've seen before and meet face-to-face those of you who I haven't had the opportunity to do that, and really work on making sure that everybody else knows how great housing counseling is and the benefits.
Really nice. Thanks so much to both of you. They'll be starting December 1st, and we will be in full throttle 2019. I expect we will have a lot more program and opportunity in the field, and expect to be interacting with both Melody and Ellie. So I'm looking forward to it. Exciting. And best of wishes. Good luck to Matthew. Great work. And we're always eager to hear how things develop for you.
I'll just quickly say, Bruce, that it's been really great to work with so many people on the call over the years. And I think many of the people on the call have been here as long as I have. So it's been quite a while, and it's been a privilege to work with so many, smart, dedicated, hardworking folks. So thank you all. And it's been a pleasure.
Just great. Okay, well, with that big news, let's get back to work. All right, so we have Ross Gavinich, who is the president of Cooperative Processing Resources. So this is a cooperative, and it's put together by a group of nonprofits, and the idea has been to make it, to provide a client management system and maybe some other things as well, I don't know. But we're here to talk about the client management system that they use. It was aimed really, I think, at debt management programs at CCCS organizations. But I'm learning now that it's actually available to any housing counseling agency. So Ross, are you with us?
Yes, I am, Bruce.
Excellent. Okay, good. Okay, well, please tell me more, and let's get started.
All right. If you guys could pass the screen on to me.
Okay, we're working on that right now.
Just bear with me for 1 second, Ross.
Technical hiccup here. We're on it, though. Matthew's on it.
All right.
There we go.
Can you guys see my screen?
Yes.
Fantastic. All right. Well, Bruce, thank you for the introduction. It's a pleasure and an honor to be here today. And I appreciate the opportunity to share the information about the cooperative with everybody. So without further ado, let's get started. As Bruce was saying, we are truly a cooperative of agencies. This is our 25th year of service. We have over 50 agencies in the US, Canada, UK, and Singapore. And what makes us different is that we truly are a cooperative. I don't have for-profit motives or shareholders. Totally answer to the agencies. And basically, we're here to support the mission of our agencies. And I think Bruce was right. We did start our life as a debt management system, but have evolved to so much more. And as far as industry engagement, we're very involved in housing, as I will show you. We're also a partner of the NFCC, its equivalent in Canada, the CCC, and we are also doing a lot of work with Catholic Charities USA as a partner in the housing space. So we're very engaged throughout the US, Canada, and parts of the world. So I obviously have to have this. So number of very large agencies across the USA, Canada, got Clarify, got Guidewell. We have agencies in Puerto Rico, Singapore, across the world. So there's lots of CMSs out there. So what makes us different, interesting, otherwise, is that we're fully an integrated counseling platform, and we only focus on counseling. And so we have 5 primary pillars. Housing, which I'll get into each one of these in a second. Housing, credit counseling, huge history of DMP processing, all the features you would expect there. Representative payee and bill payer. We also have modules for student loan counseling, internal and integrated with some external folks. And we have been expanding quite a lot lately into family services counseling. So for housing, as you would expect, a full-featured CMS, pre, post, mortgage delinquency, homelessness assistance, workshops, and complete integration with HUD. We were one of the first to be live on ARM for automated 9902 submissions, and so a lot of that functionality right out of the box. We also have a number of state housing programs that we've implemented, most famously HOP in New York State. They're pretty substantial program, but we've done work with other states for different agencies and have a lot of that built in. And I'll do some screenshots, show you kind of what we're talking about. As far as credit counseling, that's our history. So complete front and back office for credit counseling. I know there's a lot of systems out there. Some are front end, some are back end. We're one of the few that is fully integrated from the beginning to end. The other 3 areas, rep payee, and I'm sure a lot of you know what that is, and bill payer, also do a lot of work with the VA for paying folks bills. And we're seeing rep payee as probably the #1 growth revenue stream for a lot of our agencies. And we see some traditionally housing agencies now diversifying revenue streams and moving out of services. And rep payee seems to be a growing area.
So, Ross, you have to explain what that is.
Oh, okay. Sorry. So representative payee is a Social Security construct. Bill payer is the outside of Social Security construct. So when someone receives Social Security benefits but is unable to manage their money because they're deployed, as a military person would be, or they're handicapped or they're challenged in some way where they're unable to manage their money, a number of agencies around the U.S. take on the role of managing that person's money. So you create a trust account and you are actually doing everything that that person should be doing on their own, but doing it for them and using our system. So we create trust accounts, interfaces to banks, interfaces to reporting, and we're coming out with a much more extensive version of that. But that's really what it kind of does. And then obviously student loans, complete integration with the back-end systems, download the reports and go through that. And then student loan workshops. The system starts with a CRM kind of functionality, and a lot of people use that to contact people to attend a workshop. At that point, then you get into counseling. And so we support that full life cycle of the customer. The other thing we're seeing agencies, a lot of housing agencies specifically, is moving into family services. And I have some examples here, but there are many more of these that are available through the system. And a lot of times people will come in, seek counseling for 1 or 2 different problems, and the agency figures out that they need many more services. And so our platform allows that agency to conduct or deliver many services to the same client without keying the information into multiple systems or having to export, import data. Everything is in one place. As far as our core functionality, we have a client self-service portal. I'll show you some screenshots. Appointment, disbursement, reporting, BI, everything you would expect. We have a built-in document management system where you could drag case documents and it will automatically attach them to the case, all securely in the cloud. And external integration, we're integrated with a lot of different front-end and back-end systems, housing, as we talked about. We can pull and import credit reports from Equifax, Experian, TransUnion, and we just announced October 1st a new partnership with FICO and their open access integration, where when you pull a credit report, there's some additional information behind the scenes we can now expose that in a report that you can give to the client to take away. It shows what is driving their score and what they can do to help improve their FICO score, and that's all now built in. It was a separate set of tools that you had to go to FICO to get, but now, again, it's included in our system. We also have integration to accounting systems, QuickBooks, for example. We have a communications module which allows agencies to communicate with their clients to say, hey, you have an appointment coming up, you have a bill coming up, you have whatever coming up, reminders. And then if you have your own document management systems, we're totally integrated with those. So as you can see, a lot of depth, a lot more than just a housing CMS, much more integrated. This is our new DMS web client portal, and LiveFree is a fake agency we created. But basically, it allows people to create profiles, create appointments in the system, and then when the appointment's confirmed, what to bring. And the way this is written is it's a portal. It's what's called a white label portal. So if an agency adopts this, it will be their logo, their schedule, their links, and we customize it totally to each agency so it looks like it's part of your portal. And obviously, everything works on phones. So this is a screenshot off a telephone. So everything we're writing now is all completely accessible from phones, computers, tablets. And the portal is quite substantial. Again, home appointments. If you created an action plan for the client and you would like to have them access it, that can be done. If there are changes to the action plan, that can be viewed. If there are any statements, again, if you're doing financial counseling, RFAE counseling, other kinds of counseling, any kind of statements, you can share that push that to the client, and messaging. So if you're familiar with how your bank communicates with you securely in a secure messaging platform, we have that as well. And again, cloud-based, secure. As far as housing, we have two ways of doing this. So this is our housing app, and as you can see, it's all flow-based. On the left are the steps each counselor would take, and these are customizable for each agency. And you can change the way the steps are done. You can make steps required. You can make steps optional, totally configurable by each agency. And we have some HUD screens here. And again, everything is configurable to each agency. And then there's a lot of interactive type displays where you could, this is a budget, and you can send a copy of this to the client. You can either print it, hand it to them, send them a PDF. So there's a lot of integration and a lot of information that can then be handed over to the client immediately. And that's our current application. And our next generation housing portal is coming out at the end of the year, beginning of the year. We're in beta test right now, where again, we took the LiveFree agency, and now this is a counselor view where you could see all your customers, where you could see, this is, I think, appointments. Then these are all the HUD codes that we just exposed to some different screenshots. The point is here is you, again, follow the flow, get the information, suggest whatever changes, whatever things they need to make. And at the end of the day, if you do need to file the 9902, again, it's a one-step process, and you get an immediate answer. So the full 9902 integration. The other thing that we have already is reporting. On the left, you've seen, the familiar 9902. So in the middle is kind of what you file, if you were to do it on paper. And then we also have a lot of subordinate reporting around the 9902, where you could look at the data lots of different ways. And the other thing that we're coming out with and have for our credit counseling, and now just moving into housing, is our BI. And this gives you, beyond the descriptive analytics, it gives you predictive analytics on, these screens are an example of success rates for different kinds of folks when they enter a DMP plan. We're now able to predict how successful people will be in finishing certain programs. And the idea there is that if you know that this person potentially will fall off at these steps of the process, you can now reinforce their participation and engage them at these risky inflection points to make sure that they are successful through the program. And then at the macro level, obviously, we can give reports on participation geographically, by city, by zip. So, the typical suite of reporting and analytics that I think you would come to expect. And with that, that's kind of a quick screen, summary about us. So if there are any questions, I would be more than happy to entertain any questions.
So Ross, I think the first question that everybody will have is what's the cost?
So because we're a cooperative, the prices are set for everybody. So it's a consistent pricing, and the way we price is there's a fixed cost for cloud storage per agency per month, and the way that's computed is we take our annual bill and divide it by the number of active agencies, and everybody gets to share the cost because, again, we are a cooperative. And we typically charge per user per month, and it's a concurrent, not a named user. And again, there are breaks every, I think, 10 seats, and the starting price is $119, and then there are breaks depending on how high up you go from there.
So $119 a month per user, is that what you
That's
said?
correct. That's correct. That's correct. And yep, I'm sorry, go ahead.
Thanks, Ross. We have a couple questions, and Melanie and I are kind of training as we do this, so I apologize if I miss anything. You did just cover costs. Someone asked how many users you have today?
We have over 50 agencies, so there are thousands of actual seats.
Great. And does your 9902 export to the HCS site from your CMS?
Yes, it gets uploaded to ARM, which is the HUD site from ARM, so it gets directly uploaded.
And then can this be integrated with an existing CMS, i.e. can you select individual services?
Yes. Yes, we have a number of Catholic Charities specifically just use the housing module. So, we can just configure it to where you have one module and you're not getting everything else. And obviously the pricing will change, and we can talk about that. But there are integrations with CRMs, not specifically CMSs, but CRM systems like Salesforce and other like HubSpot. There's a number of CRM systems that people use to get leads and then feed that information back to us. If that's what was asked, then the answer should be yes.
Great. Somebody asked if you could just go back to the student loan counseling tools and just kind of run back over how those work.
Absolutely. There are a couple of different ways to do this. Let me get rid of the pictures. So there are three ways people use our system. One is they created some custom screens depending on how they want to do student loans within the system. And there are two external processes that we have integrated with. One is the NFCC Student Align. That's the National Federation of Credit Counseling. They have a program called Student Align where you can get information, do some counseling, and update that information. And then the other one is there's a company called eFiscal. They have a product called Student Debt Solution. That is a Q&A that can be done both by a counselor or put on the client portal for self-service. And so both of these are integrated into our CMS, wherein if somebody makes an appointment or there's intake or the information comes in, when you invoke any one of these three programs, all the data about the client is already there. So that's the difference. You can go to eFiscal and buy their program, but you won't have the information. You'll have to key all that in. But once the data is already in our CMS, it seamlessly flows through to the eFiscal and to the NFCC Student Align sites.
Great. And I'll just mention, I believe Bruce circulated some information, but we are not going to be circulating the slides for the presentation, I believe. Is that correct?
More than happy to send the PDF. This one that I'm looking at, please send it out.
Okay. Oh, okay.
Absolutely, yeah.
I think Bruce may have, but we can do that again.
No, I actually did not. So
okay.
Yeah.
Okay. I'll send it out. Yeah, absolutely. Contact me, or I'll send it to you guys. Feel free to share the PDF.
Okay. Somebody asked if you can upload from HCO.
Yes, we have written a conversion program to read HCO data and put it into our system. And in fact, there's some limited, they don't share all the data. And the only way you can get a lot of the data points is through like a report, a PDF report. We have written a way to automatically read the PDF report and get that data into our system. And we think that's unique.
That's pretty sweet.
All right. Someone said they didn't see the process for programs being created and added. Do you add the programs, or will the user have the ability to create programs and components?
Absolutely, the user can create. What we typically do is there are 100 levels of security, and so each agency we typically designate some super users, and those folks can create grants, programs, you know, any of those things, totally configurable by the agency.
Great. Somebody asked if they're asking about kind of an on-site training option, a chance for them to kind of evaluate the program's compatibility with their office prior to joining. Is that?
That's typically what we do. That's exactly what we do. So the typical conversion process is we'll do a demo, very targeted demo. You guys want to see this, this, or this. Then we do like a super user training session, and we will create a system for you. We can either get your data, or we'll put up some demo data, and we'll give you access to like a test system, and people can, you know, practice and model their processes in the system to make sure the system fits into their process model, and then, you know, go from there. So we will absolutely create a demo system for anybody.
Great. Somebody asked whether there's a sales module.
Not directly. We typically interface with folks' CRM system like a Salesforce.
Great. Does the system process DMP, debt management plan payments, as a back office? Okay.
Absolutely. Full back office, complete back office.
Great. I'm glad that made sense to you. Someone asked whether the bridge for CMAX is the same as HCO?
Probably similar, yeah. So we have not found a system from which we cannot import data.
Great.
It's a bold claim, but
maybe
actually...
just to understand it, so if somebody's a Counselor Max user currently, or do you have Counselor Max users currently who bridge to the program?
They do not bridge, but we have converted people from Counselor Max into our system, but we don't have a live bridge to Counselor Max.
You may have covered this. In addition to the monthly cost, is there kind of an upfront cost to join the cooperative?
Yes, there is. It's $1,500 to join the co-op. And then depending on how many systems, there's either somewhere between $0 to $2,500 conversion fee. If it's one system and it's something we've seen before, it's usually pretty trivial. But if there are legacy systems, or if there's, you know, we had one agency run on, you know, these custom-made Excel models, and they, you know, if there's a bunch of time to convert, we will charge for that conversion. But otherwise, there's just the setup fee.
Great. We're getting down to the last few questions here. Someone said that they use their manager for their rehab program to track costs and payments and match clients. Is that, does your model support that?
Yep, we can do that.
Great.
We have an agent that's doing it right now in Florida. Yeah.
Great. And then there were just a couple of questions about the rep payee, the representative payee that you mentioned. Someone asked, do you have a list of agencies that have signed on to use the rep payee for you, for an agency that would maybe want to partner with them, that is interested in having a strong partner or a strong referral, but not necessarily going to be doing it much or any themselves?
Yes. Yes, there's a couple of agencies, one on the East Coast and one in sort of north central United States that partner with others to process their rep payee. Absolutely. Reach out to me individually and I'll put you in touch with those folks.
Great. Well, we got another flood of questions. Bruce, how are we doing?
See?
How is Jesse on? Is the question is, can you just tell if Jesse's joined us?
Jesse, it looks like you're on. Can you hear us, Jesse? And Jesse is on. We can't hear you, Jesse, so you may need to, hopefully you can hear us. For you to be able to talk, you would just have to do #286#. So hopefully you can hear that, and I'll have another question or two. Is there a multi-user discount if an oversight agency would like to use the system? We have 20 agencies that report to us.
Yes, absolutely. Absolutely. There are price breaks every so many seats. Absolutely. So yeah, I'm starting to pull up the questions. There's a question of like, how long has these agencies been using this product? The answer is 24 years. And for anybody who's confused about pricing, again, it's a cooperative model, so please reach out to me and I'll be more than happy to explain the model. Again, it's a little confusing because, if I have more agencies that join, certain costs go down for us, and then we'll share that cost savings across the members. So there's the value of the cooperative model. So there's a couple of questions about, what if there's more agencies, less agencies? So if there are more agencies, everybody's costs go down, and therefore I will pass the savings on to the agencies. So that's the benefit of being a cooperative.
Great. Sorry, I'm just trying to connect with Jesse so we can make sure we have him on.
No worries, no worries. So it means other agencies not using housing counseling. Majority of the agencies in the U.S. do use the HUD housing module. Agencies like in Canada do not, for example. So, yes.
So let me just ask a quick question on so you can pull a credit report through there, and can you choose your own
Absolutely.
credit report?
Yeah, absolutely. You can choose your own. Yeah, we work with all, actually the 3 primary, and then Digital Matrix, which is like a tri-merge, and we will pull in trade lines into the debts, into the client's debts directly from the credit report.
Well, so for example, if you're an NHRC member, you can you get that discount through CoreLogic and substantial savings. Can you pull through CoreLogic, and will that integrate?
We have not to date, but I don't think why I wouldn't.
Okay. And are the kind of the basics of home buying, front end, back end ratio, and those kind of pieces, are they built in?
Yes.
Good. Do we have Jesse?
Jesse,
yes, I'm here.
Oh, good. Okay. Well, so let's do a quick thank you, Ross.
Issues with you.
Excellent. So hang on for a moment. Just so, Ross, thank you so much, and we'll be happy to circulate the PDF and your contact information. We'll do that tomorrow or this afternoon.
Yeah, my pleasure.
Great.
Oh, thank you.
Good. Okay. So we're going to pivot to the Community Reinvestment Act issues, and obviously NCRC's been a long-time leader in this field and has done the work that we all kind of want to support and join. So at a critical time, we thought it would be good to hear kind of the longer-term, bigger perspective, and so invited in Jesse Van Tol, the CEO of NCRC. So Jesse, I know you've got a busy schedule. Thank you for joining us here.
Yeah, thank you, and I'm sorry, folks, for being a little bit late. I'm on the road on the West Coast, and I mixed up the time zones, but here I am, and thanks so much, Bruce, for having me on this important topic. So I'll launch right into it. I think we have about 20 minutes here, so let me just launch into the issues. Many of you are probably already familiar with the Community Reinvestment Act, but for those who don't, just a quick kind of briefer refresher. CRA was passed in 1977. It establishes an affirmative obligation for banks to invest and lend, particularly to low and moderate income communities. And the law was updated in the mid-1990s. it's important. I think the important thing to know, CRA is one of these laws that kind of works behind the scenes, motivates banks to invest in land, to partner and to work with local housing groups, housing counselors, and the like. But CRA is always, there's always been this issue of demonstrating its impact because it involves proving a counterfactual. What would happen if CRA didn't exist? If the banks didn't have this affirmative obligation? And for any of you on the call who are wondering, has my organization benefited from CRA? If you partner with, work with, receive donations, do housing counseling with banking institutions, you have undoubtedly benefited from CRA. But a few years ago, some researchers from the Philadelphia Federal Reserve set out to try to measure CRA's impact. And they looked at the Philadelphia metropolitan area and the number of census tracts that got redesignated from being CRA eligible to no longer being CRA eligible, no longer part of the Philly MSA and no longer low and moderate income. And what they found following that change was a 10 to 20% drop in home lending and in small business lending following that change. And that's a pretty conservative estimate. Banks are still in those communities. They still get credit for lending to low and moderate income people. But you see a 10 to 20% drop in lending after the redesignation. Well, we decided to take a look at this and do an estimate. If CRA were to go away tomorrow, or at least the geographic designation of CRA, if that were to go away tomorrow, what would happen? And it's a $50 to $100 billion drop in home and small business lending over the next 5 years, if CRA were to go away tomorrow. And if you look at philanthropy and community development activities that banks do, there's reason to believe that much of it would go away, not 10 to 20%, but the majority of it would go away. And just looking at the top 20 banks, that's about $35 billion a year that they do in community development investments, lending, and philanthropy. For comparison, I'm sure some of you know this better than me, but CDBG is, roughly $3 billion a year. The housing counseling funding that we all lobby for every year, is in the tens of millions of dollars. So this is really significant support for the work that we all do in community. Now, I'm telling you all this because, the Trump administration is looking at changing the way that CRA works. And they started with this Treasury white paper, and more recently, the OCC has been pushing for reforms to CRA based on the very particular vision of Joseph Otting, the comptroller of the currency, who ran One West Bank in California. And some of you may be familiar with One West. Mr. Otting was called the foreclosure king of California, has some personal experience with CRA. His merger was challenged on a CRA basis by one of our members, the California Reinvestment Coalition. Came into the OCC, announced that CRA was top of mind, top of the agenda. And it has now released what's called an advance notice of proposed rulemaking. It is a series of questions looking at some ways in which they might update CRA, to, in their words, do a better job. They have claimed that they would like to see CRA do more, not less. But along the way, they've proposed a series of ideas that even by their own admission, are essentially aimed at making it easier for banks to fulfill their obligation, to allow them to count more activities, which could have a watering down effect, and really a number of ideas that would undercut the way CRA works. And CRA, again, is all about local credit needs, the convenience and needs of community. The way CRA is structured inherently compels banks to reach out to local organizations to assess those needs, to partner with them to meet those needs. And I'm going to suggest to you as I go through this that a number of the changes they are considering, in fact, would undermine that local engagement, would undermine their necessity to assess local needs, to work with and partner with local organizations, to be responsive to what's happening in community, whether that's rising rates of foreclosure or other types of counseling needs or not. The OCC has a number of ideas posed in this ANPR that would effectively gut those kinds of requirements. And the main idea, sort of at the risk of losing some people, and Bruce, certainly interject if you think I should clarify if I'm moving too quickly here, but the OCC's main idea is really boiling CRA down to one metric or one ratio. And the one metric or one ratio is an idea that says you count up all of the things that are CRA eligible, and certainly, support for housing counseling groups, support for affordable housing development, the loans that they make to low and moderate income people. You take all of that activity and you add it up, and then you divide it by some measure of the bank's capability. And the capability could be their total deposits, their total assets, something like that. And you come up with a metric, a ratio, that if it's above a certain level, the bank passes CRA. Now, the problem with that is it will drive CRA activity to the highest margin, lowest risk, lowest effort activity. It will drive CRA activity to gentrifying areas in a substantial way. It will drive CRA activity to very profitable endeavors, and it will change where CRA activity occurs. And it will undermine the qualitative part of CRA, the whole assessment of local needs, the whole working with, talking to, partnering with community groups. It basically says if you can hit this number, you're good. And combined with some ideas around assessment area reform, sort of where CRA activity gets counted, that it appears they're pondering freeing banks up to go almost anywhere or certainly beyond traditional assessment areas, combined with some ideas about broadening what can count. I've heard ideas ranging from, maybe every kind of partnership with a church, with a faith-based institution, regardless of meeting the CRA definition, should count. Other ideas about what should count that really would take CRA away from its traditional focus on low and moderate income people. All of these ideas contained within this advance notice of proposed rulemaking present a significant threat to housing counseling organizations, to housing organizations, to community groups around the country. Now, the ANPR is not filled with bad ideas. There are some good ideas. There are lots of areas where people agree that CRA needs to be updated to be more effective. And certainly we are pushing and promoting those ideas. But there's enough in there to be concerned. And CRA is one of those things that sort of works in the background. And because it's not a program like FHA or HAMP or HARP, because there's not this constant counting of number of dollars, we tend to take it for granted. It's sort of there. But now is a moment where we really need everyone to become active and involved, to comment on the advance notice of proposed rulemaking. So let me tell you how to do that, and then I can pause and take questions or cover anything that I miss. But we have set up an action page, ncrc.org/treasurecra. We have template comment letters. We have research tools that allow you to flow in information about CRA's impact in your community. Lots of resources to read up and become educated about this. The deadline is November 19th, which is just around the corner. This advance notice is not a final rule, but it is sort of when the key decisions get made. This will shape what final rule comes forward, and it's imperative that people comment now to impact that. So I talked quickly and covered a lot. Let me pause and see if there are questions.
And just quickly before we do, Jesse, I was just going to circulate that website. It's ncrc.org/treasurecra.
That's right.
All right. I will send that out to the group now.
So, and it's actually an excellent website. And is our sense that will be most effective here is not necessarily sign-on letters, but that quantity will matter in this? I know in some of the comments that in a regulatory process that it's individual comments, detailed comments that will have the highest impact. Is that correct in this case?
That's exactly right. And we will do a sign-on letter, and I know others will do sign-on letters as well. But it really is about the number of comments and the quality of the comments. If you do use one of our templates, we urge you to sort of make it detailed, make it specific to the experience of your organization. And that could be as simple as, we run a housing counseling program, and we receive support from banking institutions. CRA is a really critical tool for us to continue to do the good work that we do in community. I think those kinds of, and it could be good experiences in terms of CRA. It can be bad experiences. I think that the ways in which CRA should be strengthened to hold banks more accountable, those kinds of details are important as well. But yes, the quality of the comments, the detail, and the number of comments are very important here. And we have people on our staff who are happy to get on the phone and kind of work with people to say, here's the kinds of things that you might mention.
Okay, that would be great. And then I think one of the things that struck me is that it really sounds like they're kind of moving away. One of the great things about CRA is its geographic focus, and this is kind of one metric moves away from that, and its focus, as you've said, about working with community-based organizations, which allows you to have a much deeper connection to the community. And those kind of this loss of those relationships would be, I think, a tremendous loss in the communities we're trying to serve.
Yeah, that's exactly right. So the notion is, the banking industry has changed. A lot of banking is now done online. There's whole new players who are online only, fintechs, et cetera. There are some institutions that have no branches. And so CRA was based on the branch network. That's where banks get assessed. That's the geographic focus. And the debate is over NCRC's approach to modernizing that would be to continue to have a geographic local focus, but to determine that slightly differently, not just where a bank takes deposits, but also where it's making loans. And so you would modernize the assessment area by changing where banks get examined, but still closely tying the assessment to local communities, and still tying really the way that CRA functions to a real qualitative kind of back and forth. Candidly, CRA is underutilized. If more people commented on CRA exams, I'm very confident banks would be forced to do more in those places. Their ideas around assessment areas, their ideas around this one metric, really take it away from that type of exercise in being present in community and having staff in reaching out to more of a quantitative approach And that's likely to mean banks have less people in community, that they care a lot less about what community groups think. And it's all about the numbers. It's all about bigger deals. I mean, it will encourage them to make higher dollar mortgages and higher dollar investments in philanthropy, and not the kind of smaller stuff that they do today to be responsive to community needs.
So, your mission, speaking to everybody who's listening, is to go to the NCRC website, take a look at the models, but to write something and really just do it today. Do something that kind of speaks to this. I mean, this is, I think, if there's one tool that's important for our work that really can change the way that low and moderate income people have access to credit and the communities that they live in, this is the tool. And the idea that we need to make it easier on banks, well, nobody's against a simplifying process if it delivers high quality opportunity. But it looks like what will happen instead is that there will be a real loss of the kind of complicated loans that are needed to help people qualify for a mortgage, get construction projects going in the communities that we care the most about, and then small business lending. All of that is kind of at risk. And I think there's also what is included in assessment. And so the idea that, for example, a hospital might be included in the assessment, and really that gets away from addressing the issues of redlining and housing. We could stand to lose a tremendous amount of ground on those kind of issues. So our job is we all need to do this. So Matthew's last project will be to do our comment on this as well. But I think the individual letters from organizations will matter a lot in this, and having broad emphasis will be key. So thank you very much, Jesse, for all the good work you're doing and keeping us on top. And we'll look forward to talking when the next round of this hits after this process.
Yeah, thanks, Bruce. And again, I just implore you to go and comment and do it before the 19th. Do it as soon as you can. Thanks so much.
Excellent.
All right.
Great. Well, thank you, everybody. So let's do a quick plug, and then we'll talk about what the schedule for the calls are in November, and what we're going to be talking about. But first, just wanted to, if you haven't joined NHRC yet, please do this. Our ability to be flexible and to be able to do the kind of, especially lobbying work that we do, really rests on membership dues. And I think I said earlier in the call, we've had a very good year this year. A lot of more groups have joined, and the good news is that there's still room for you to join. So if you haven't joined yet, please do. We sent out a round of renewal emails for the groups that are renewing at this time of the year, but renewals have been up as well, so it's been a very good year for us. Discount is still available. I know there's a few groups that aren't using it. Please feel free. It makes everybody happy to save some money on the credit reports, and CoreLogic does a great job. So really quickly, our next call will not be on schedule. We're going to push it back a week to November 8th. And oops, didn't get the right information on there. My mistake. The next call will be on November 8th, and it will be we'll do a deep dive on Facebook and using Facebook as an outreach to underserved communities tool. Ellie's been working in the Facebook field with our events, but has also been working with Laura, and I blanked out on her last name, but she's a Facebook expert. We met her at Home Smart New York at their meeting, and she's excellent. She's really very rapid fire. It'll be a very deep dive into very specific elements of Facebook and how you can use it as an organization. And there we go. well, maybe there we are. Good. And then so we won't, and so we'll do that. We'll also talk with Valkyria Poole from CAF and Agatha So from Unidos US and Linda June from Americans for Financial Reform about the work they're doing on this working group for language access and improving language access in the mortgage field with FHFA and with other institutions. And there's been it's been improved and to develop working terms for so we'll look forward to talking to you then. Thank you everybody for a good call, and we'll talk in a couple weeks. Thanks. Bye.